What is up, everybody? Welcome back to the Crypto Sherpa Show, where I go over the most recent crypto news articles so you can stay informed and just know what's going on in the crypto space. So, sorry for the late show. It was had to do Ben's morning show this morning. Had a couple clients come into just walking on into the crypto club looking for help. Scheduled them for later appointments. I'm like going, I got to do the show now, so that's why I'm late, guys. Also, I made sure to use the restroom before I went live because yesterday I had to cut out two articles short just because I had when nature calls, right? But yeah, welcome back to the show. We're going to talk about one of our articles, like, is the 4-year Bitcoin cycle dead? Like, I've been kind of seeing this lately and like even thinking about it too, because everything with Bitcoin going on right now is it's so different. It's not following the traditional cycle. Like, ever since we hit the all-time high before the halving event, that already showed us, like, that was a start to tell us that we are not on the same cycle anymore. Like, things are acting different, especially with Bitcoin. Altcoins, they're still doing their whole thing, but with Bitcoin alone, though, are we gonna start looking at this completely separate from altcoins out there? I don't know, but let's find out in this article we got for you. And then there's a couple other news articles I got for you as well. How we got a pause on tariffs for 90 days, which caused like the cryptos to spike. We have, what else with Trump and everything? No, well, not just Trump. We have Atkins in as the SEC new lead, officially nominated. So, woo, way to go. And then we have a couple other news articles for you. So, yes, but let's start off with is the 4-year Bitcoin cycle dead? Because I'm sure everyone wants to know. So here we go. So this one's coming from crypto.news. But as financial institutions, corporations, and governments increasingly began to adopt Bitcoin, some observers of the crypto market started to question whether the 4-year cycle model typically applied to Bitcoin is still relevant. Well, let's see how this cycle is designed and why many people doubt it is still reliable. So it's like really like we're wondering, like, are we going to fall under it? Are we going to expect like a decline by 2026? Are we going to want to like move over our coins into like a stable coin back into cash, or do something else with it? It's like, are we going to follow that cycle, or do we just want to keep holding on to our Bitcoin? Cycles really didn't matter. I'm just still collecting and hodling because I'm not in a short-term game of Bitcoin. I'm long-term, I'm life, I'm hodling, and I just know the benefits I'll have in the future with it. But yeah, so like, are these markets still reliable? Well, an X account called Bitcoin Archive posted a poll asking if the 4-year cycle for Bitcoin are over. In 10 hours, over 10,000 accounts cast their votes with the affirmative answer, leading a 52%. It doesn't necessarily mean that the 4-year cycles are not reliable anymore, but rather it indicates that many people see that this landscape is changing, and we are definitely seeing big changes in here. But before we go on, we got to continue on. We got to understand the 4-year Bitcoin cycle. So when Satoshi Nakamoto created Bitcoin, he encoded the mechanism that cuts the mining reward in two, roughly once every 4 years, in the event known as the halving. It drastically reduces the inflow of new Bitcoins to the market. It elevates the cost of unlocking new coins via mining, as miners have to spend the same amount of resources to get 50% of what they were getting before the halving. Therefore, they have to sell what they mine for higher prices to keep their operations profitable. Now, given that the BTC price is mostly driven by demand and supply, halving sets the 4-year cycle for Bitcoin's price very naturally. The number of new coins shrinking every 4 years, and the prices of these coins inevitably goes up. And yeah, it's not always 4 years exactly on the dot. It's in actuality, it's every 210,000 blocks on the Bitcoin blockchain. Now, the average block time in Bitcoin's blockchain is 10 minutes. That's the average. Some could be faster to be solved. Some could take longer to be solved. But the average is 10 minutes, and that's how we usually get the 4-year cycle from that. But given that BTC's price is mostly driven by demand and supply, the halving does set this 4-year cycle for that. But the Bitcoin 4-year cycle has several stages. Within the 12 and 18 months after the halving, the BTC price goes up and hits new all-time highs. Some traders even expect the bull market to begin several weeks ahead of the halving. But usually the bull market is succeeded by the bear market once the BTC price reaches a new record high. Now, the price drops in several stages, substantially decreasing in comparison to the peak price, but mostly it remains higher than it was before the halving. It makes Bitcoin a persistent, long-term grower. Now, in the past, and even the years of every cycle were having year in year of the sharp price decline. While the uneven years saw price growth, each year after the halving year, the price of Bitcoin was characterized by a new record, and some are like 1,000% or even higher growth. However, in 2021, it had only a 57% annual growth rate due to a strong bear market by the end of the year. Now, although the 4-year cycle has been reliable in the past, the last few years saw new tendencies. For instance, it was revealed that in 2024, many miners prefer not to sell their Bitcoin from what they mine and instead just keep it to themselves, as they believe the BTC price would go higher. So they didn't see any sense in exchanging Bitcoins for fiat money and missed the bull run. Now, can we still rely on the 4-year Bitcoin cycle? Well, the latest halving took place in 2024, and in 2025, the Bitcoin price had already updated its historic maximum, reaching $108,786 on January 20th. Now, this may be seen as a confirmation of the 4-year logic. However, if the 4-year cycle is dead, then we may face something new, the strong bearish reversal or extension of the bull market to the following years. Now, in recent months, the BTC price has been shaky despite favorable regulations, higher adoption rates, and other bullish news. It makes crypto investors wonder if the bull market actually continues, and it may be seen as a sign that the change that made the 4-year cycle obsolete. Now, we have co-founder of Syncrecy Capital, Ryan Watkins, as one of the prominent advocates of the idea of the 4-year cycle's death. In January 2025, he stated that it was better to reject terms such as cycle and altcoin season. He believes that the introduction of a Bitcoin exchange-traded funds will reshape the Bitcoin market by welcoming institutional investors to participate in legal terms. Now, here is that tweet he showed. Now, mostly agree with this, with the key difference that Bitcoin and everything else are likely on different timelines. In my opinion, the asset class is beginning to bifurcate between Bitcoin plus stablecoins, which are very much on the plateau of productivity and everything else which it is on. And here he's showcasing a little outline of that. And then we got Chris Bernsky chiming in, continuing to believe that there are high odds we break simplistic 4-year cycles that BTC has honored the last 12 years. Now, if that happens, most people realize that they overtraded what's to come with too short-term a view, but to buy that thesis, you have to believe in the blockchain. Now, Watkinson believes that a Bitcoin potential is now apparent, but it's not yet reflected at the adoption level yet. So now Bitcoin is entering a new era of greater adoption, maturity, and certainty. Now, this government and institutional investors will foster it, and the price will be less shaky. Now, it is also worth saying that the 4-year cycle model never was the law. Market observers anticipated that the changing market conditions might alter the way Bitcoin prices act. However, as the poll results suggest, nearly half of the people still rely on the 4-year Bitcoin cycle. And here was that poll that showcased that 4-year cycle over. And Iggy Welt, I think he was the naysayer of that. He was like, hell no, the biggest shakeout in BTC history. I survived the bear market of 2014, and this does not feel like a bear market. Technical bear market, yes, but not a crypto winner. Now, while we can consider the current phase as a bull market, we have to admit that global economic uncertainty doesn't let crypto investors enjoy the ride. When the dust of the trade war settles, we have a better chance to see if the 4-year cycle is still working. Now, if the cycle is still alive, then 2026 should be a year of bear market. Now, the state of the crypto market in 2026 may serve as a litmus test. So we're going to see what goes on. Because again, usually with the cycles end, it's 2026, and that's when the 3 years of bearish times take place. But if it continues on, then that does tell us that, okay, we are different. We can't really rely on the 4-year cycle anymore, and we have to start seeing these coins in a new way. So yeah, so that is the 4-year Bitcoin cycle. Do you think we're dead? Do you not think we're dead? Let me know in the comments below, and just let me know your thoughts on that. Are we seeing something completely different? Because I personally feel like we are now. But again, there's different paths we can go. Bitcoin could follow traditional cycle trends, goes up, 2025, we have a dip, or we could have a longer cycle that just continues to go up, or we have a separation of altcoins and Bitcoin and everything, and then Bitcoin still goes up, and then altcoins still have their usual 4-year cycle with it. So there's still many paths that could happen, but this is just something just to consider in the back of your head. But that is that news. Now let's go on to some good news for why is the price of Bitcoin up. It was at 80,000 or 81,000 this morning. I think right now it's 78 at the current time. But we had a spike. But that's because yesterday Trump confirmed a 90-day pause on tariffs, except for China, because those guys are giving a hassle. But yeah, Bitcoin and stocks both surged. And did I just change that up? There we go. Oh, yeah, so Bitcoin and stocks both surge, and yeah, Trump confirms a 90-day pause on the tariff. And yeah, as we can see from crypto bubbles right now, crypto's still doing booming for compared to like on Monday when everything was in red, both stocks and crypto. But crypto's booming. Stocks, I think, had a good day, but as of today, they are still red. Look at this is all the stock charts. So yeah, we got bubbles for stocks and we got bubbles for crypto. I'm definitely enjoying the crypto look more instead. But let's hear a little bit more about this pause going on right now. So, US President Donald Trump said on Wednesday that he will allow a 90-day pause on the implementation of a reciprocal tariffs against most countries, prompting cryptocurrencies and stock prices alike to spike in the immediate aftermath. Now, the price of Bitcoin jumped 4.6% in less than an hour to $81,300, while Ethereum spiked 6.1% to $1,600. And XRP even had a nice surge of 10% to $2.03, according to crypto data from CoinGecko. Now, stock indices, so stock indices also surged on Trump's declaration, with the S&P 500 and the Dow both climbing in excess of 5%, while tech-heavy Nasdaq surged over 8%. So I probably missed that with those bubbles chart because I mainly just view crypto, not the stock. But I did hear that they did have a little spike yesterday as well after that announcement. But they said, I have authorized a 90-day pause and substantially lowered reciprocal tariffs during this period of 10%. Also effective immediately, Trump wrote on TruthSocial, noting that China is excluded from this tariff pause. Now, the president said on Wednesday that Chinese goods will now face 125% levies effective immediately, heightening the tit for tat between Washington and Beijing in recent days. Now, on Wednesday, China unveiled an 84% imports on U.S. goods, so it's a back and forth going on right now. But they said, or Trump said, I think now the market understands that everything they saw last Wednesday was a ceiling, and now we have a temporary floor. U.S. Treasury Secretary Scott Bessent said, in my 35 years in the market, I always wanted certainty, and now I think we've got some certainty. Now, Trump's trade war has sent risk assets plummeting in recent weeks on fears that tariffs could pinch pockets among U.S. consumers while also weighing on the growth across the globe. Now, Bessent said that the White House is about to face on most reciprocal levies and was not a result of falling stock prices, but rather a decision that the president reached based on the response by most of our allies and who have been operating in good faith. Now, the crypto market itself rose 3.1% in value, hitting $2.63 trillion, according to CoinGecko. And when Trump unveiled sweeping tariffs a week ago, the crypto market was worth $2.74 trillion. So, yeah, so that definitely did shake the markets going. But hey, with a pause, we're seeing that the tariffs did cause an effect on the price out there. And now with a pause, we see the prices going back up. So, I don't know. You tell me. Like that, just in my eyes, that seems like tariffs was a big cause of this and making people's decision of do they want to buy or do they want to sell Bitcoin. But yeah, so that's what's going on around the world right now in that news. Now let's go into the news on how Paul Atkins, becomes the next SEC chair. And now what's next for crypto's industry? Well, SEC Chair Paul Atkins has a long career in finance and aims to provide clear rules for the crypto industry. So the crypto industry has welcomed the confirmation of American businessman and former U.S. Securities and Exchange Commissioner Paul Atkins as chair of the agency. Now, Atkins' approval has taken months, and he appeared before the Senate on March 27 to explain his intended approach to securities regulation and in the United States, as well as his views on digital assets. Now, Atkins will replace acting chair Mark Ulita as head of the agency, which began unwinding a number of court cases and enforcement actions against cryptocurrency firms when President Donald Trump took office. However, these actions don't amount to clear guidance yet. But now that Atkins is ready to take the helm, the blockchain industry is hoping for the guidance they've been wanting for years. So who is Paul Atkins and what can the industry expect? Senator Cynthia Lummis was like, I'm pleased that Paul Atkins is confirmed as chairman of the SEC. I sat down with Mr. Atkins to discuss digital asset legislation, empowering Wyoming blockchain futures, and implementing reforms to regulatory rulemaking processes. Now, I'm confident this leadership will bring positive change, and there they are at. And it really is like the whole world is like going to be going through changes. The US is definitely going to benefit a lot more because we didn't have any rules or regulations in crypto. It was just all crypto bad, Bitcoin no, don't use it, and like just put halt on everything. So I feel the US is definitely going to see a lot more changes, but the rest of the world is changing along with it. But Paul Atkins wants to provide guardrails for the crypto industry. An alumnus of Wolford College and Vanderbilt, Atkins has a long career in finance. He initially worked at Davis Polk, a Wardwell, before serving on the staff of two former chairmen of the SEC from 1990 to 1994. Oh, wow, he served that right when I was born, 1990. But notably, under Chairman Richard Breeden, he assisted in efforts to decrease barriers to entry to the capital markets for small businesses and middle market companies. Now, after working at PwC and Coopers and Liband, Atkins joined the SEC again as commissioner at the appointment of former President George W. Bush. Now, at the SEC, Atkins focused on improving financial services compliance with the SEC regulations. He also worked with law enforcement agencies in cases where investors were harmed, and this included the Bennett funding incident, a $1 billion Ponzi scheme by the leasing company in which 20,000 investors lost much of their investment. Now, after leaving his role as commissioner, he found and led Potomac Global Partners, a consultancy for banks and financial service firms. Now, ahead of his 52-44 confirmational vote, largely along party lines, Atkins faced a grilling from the Senate Committee on Banking, Housing, and Urban Affairs at the hearing. Atkins said that the top priority of his tenure as chair would be to provide a firm regulatory foundation for digital assets through a rational, coherent, and principled approach. Now, he said that the current ambiguous and non-existent regulations of digital assets harms innovation and the sector. More broadly, he claimed that the world industry wants to invest in America, but the current regulatory environment for our financial system inhibits investment and often punishes success. Now, Congressman Tom Emmer. And we're back, guys. I am sorry. Somebody is messing with our power out there because the switches were going off and on. So power shut down. I had to log back on into the computer, get everything up and running again. So sorry for that pause. I'm going to have to edit this in a later video. But where was I even at? Like, we were talking about Paul Atkins and his career and just his career so far leading up to being the new head of the SEC. And let's see, he got a 52-44 vote. Congress Tom Emmer, we were talking about that. And then I got to this point where we're about to talk about the SEC's actions under ULITA, points of further crypto priorities. So let's just continue on. I'll edit this for future videos, but for those of you watching live, sorry about that. But while no one has a crystal ball, recent analysis from Cointelegraph shows that the recent dismissals of court cases and enforcement actions may indicate the future direction of crypto regulation or lack of regulation by the SEC. Now, related news to this is that the US government's actions give a clue about the upcoming crypto regulation. Now, the dismissal of cases revolving around the unregistered sale and offer of securities under the Securities Act of 1933 and acting as unregistered as a broker-dealer, clearing agencies and exchanges suggest that the SEC may not consider the asset as involved as securities. But the idea is bulwarked by recent statements from the SEC that proof-of-work mining, pooled mining, and dollar-backed stablecoins are not subject to security laws out there. Now, on the whole, this suggests that the SEC does not consider cryptocurrencies to be subject to securities laws. Now, what crypto agenda could be hamstrung by recent SEC dismissals? Well, at one point of friction in Atkins' ascension to the SEC chair is the recent spate of dismissals of the SEC staff. The Trump administration efforts to cut certain types of government spending through the temporary committee of the Department of Government Efficiency, otherwise known as DOGE, have not spared the securities regulator. As reported by Politico in March, a combination of different buyouts and dismissal programs will effectively be getting rid of 10% of the agency's 5,000-strong workforce in the coming months. Now, one source mentioned in the report suggested that the total could be closer to 15%. Now, Dodge leader Elon Musk, who himself has run afoul of the SEC numerous times throughout his career, is reportedly seeking further cuts to the SEC's already lacerated budget and staff. Now, a group of prominent security law professors known as the Shadow SEC has raised the alarm about the recent cuts, saying diminishing the SEC staff will lead to chaotic financial markets, longer review times for registrational statements, and weakened enforcement capabilities, creating a new framework for digital assets, especially from scratch, which could take longer if the agency is bleeding and expertise while Musk wields a scythe in Washington. We'll see what continues on there. But yeah, so having Paul Atkins there now officially, we still have Dodge and Elon Musk. Like everything's going so great right now. Like it's definitely scared a lot of people. Everything going on. It's like, oh, Trump's gonna topple the economy. The dollar's gonna go away, or it's gonna go so down. It's gonna hurt people. Hey, it's a game of chess, but I think that's good for the crypto and Bitcoin industry right there, and just getting everything more settled, because these guys have been getting away with so much bad stuff and just stuff they shouldn't have been doing. So by doing all of this, just works out in our favor. But that is our Paul Atkins becoming the SEC chair news and everything there. Now let's go take a quick ad really fast. Let's just take a little break so that way we can continue on afterwards. So here is our ad from our sponsors.
In a world where your data is constantly under attack, one company stands for your digital freedom. Introducing Calyx Solutions, your gateway to ultimate online privacy and secure cryptocurrency trading. Meet the Liberty Laptop. With its modified OS and advanced tracking prevention, it's your shield against surveillance. Access restricted areas, use recommended security software, and browse with confidence. Your digital footprint? Virtually non-existent. For the crypto pros, we present the Crypto Laptop. Pre-configured on premium hardware for secure trading. Optimized for your favorite wallets and exchanges, it's the fortress your digital assets deserve. Both laptops come with expert individual training and support. You're never alone in your journey to digital empowerment. At Calyx Solutions, we put you in control. No more worrying about data breaches or compromised transactions. Ready to join the revolution? Visit calyxsolutions.io and choose your perfect laptop today. Plus, become an affiliate and earn while sharing the power of digital freedom. Calyx Solutions. Unlock your digital freedom. Give us a call or text at 702-845-8276 or visit us directly at calyxsolutions.io.
And we are back. Now let's continue on with the news. What else is going on? So let's move away from Bitcoin and go over some altcoin news, like what's going on in the rest of the crypto space, because it's not just Bitcoin out there. We have tons of altcoins. And now it looks like we have Charles Hoskinson, the creator of Cardano's ADA. He reveals that Midnight Night token is about to get an airdrop for 37 million crypto holders across 8 networks. So let's hear about this. So Charles Hoskinson reveals that Midnight, with the abbreviation NIGHT, airdrop for 37 million crypto holders across 8 networks in the coming months ahead. So you may want to hear about this on maybe how to acquire it. So the crypto community is already celebrating the major rally that came for the crypto today. This recovery came from Trump's decision to suspend most of the tariffs he had announced for 90 days. And in turn, both the stock market and the crypto market pumped significantly, reviving bullish sentiment amid this bullish turn. Now, Cardano founder Charles Hoskinson reveals Midnight's airdrop for 37 million crypto holders across networks in the coming months. Now, here's what Charles Hoskinson revealed. The Cardano blockchain has gone through a tremendous transformation since its foundation. However, the state it is now today took so long to do. It was slow, but it has been a steady progress to get there. Now, the Cardano blockchain was developed to be a truly decentralized ecosystem. Thus, it needed to be peer-reviewed and developed based on an intense amount of time and research, and it seems now that the time has finally come for it to deliver on its initial promise. Now, the last bull cycle, ADA price pumped significantly, even though the blockchain could not do as much as it can do now. In fact, just over the last 4 years, Cardano launched smart contracts, which helped its community grow. Now, most recently, it is boasting of the upcoming Leos upgrade, which will bring Solana-style speed to the blockchain. Now, this would mean that once the upgrade goes through, the Cardano ecosystem will deliver speed, scalability, interoperability, and decentralization, an impressive feature that it indeed needed. Now, what is the Midnight blockchain at night? Like, what is that? Another venture that Cardano founder Charles Hoskinson took up during this time was to build a network that could truly deliver real privacy and anonymity on the blockchain. This he called Midnight. The Midnight blockchain powers data protection by utilizing zero-knowledge proofs to protect sensitive data and improve developers' experience with developer-friendly tools. Now, here is from a tweet from the Angry Crypto Show. Just in, Cardano's ADA founder, Charles Hoskinson, says in the coming months we'll drop the 37 million people on 8 networks. If you hold Bitcoin, ETH, ADA, XRP, Sol, and a few other coins, you'll get a Midnight airdrop with chain abstraction, and you can now use Midnight and pay with your own crypto. And there's a little video showcasing him of talking about it, but we don't need to play that. But the native token to the Midnight blockchain will be called Night and is expected to launch sometime over the next few months. As we can see from the post above, anticipation and expectation are high for the arrival of night. Amid a time when crypto is rallying again, Hoskinson goes on to reveal that in the next coming months, night will be airdropped to the 37 million people across 8 networks. Now, he then confirms that users who hold BTC, ETH, ADA, XRP, and Solana, and a few other tokens will receive Night, so they can experience the Midnight blockchain with ease immediately when it's ready. He then talks about chain abstraction and says that users can use the Midnight Night and pay with their own crypto with it. So we know it's going to be BTC, ETH, ADA, XRP, and Sol. But what are those 3 other chains that he's going to use? Like he's saying it's going to be distributed on 8 chains. We heard 5 of them, but what do you think those other 3 tokens are going to be? So we'll have to wait and find out. This will be released in the coming months, but that's just a little bit about Midnight news for you if you were curious about the token, seeing what else is going on with the Cardano ecosystem. And yeah. Now let's move on to another token, because it looks like tokenized gold volumes have hit $1 billion for the first time since 2023 and the US banking crisis. So yeah, there are tokens out there, like if you want to, that are backed by gold 1-to-1, like the PAX-G token. Yeah, it's like 1-to-1 to 1 ounce of gold is equal to 1 token. I believe that's it is. We'll find out after this article. But tokenized gold trading volume surpassed $1 billion as Trump's tariffs drove investors towards a safe haven asset, pushing gold-backed tokens to a 2-year high. So tokenized gold trading volume surged to 2 years high this week, topping $1 billion as investors pivoted towards safe haven assets amid global uncertainty triggered by US President Donald Trump's tariffs import. Now, the weekly trading volume of tokenized gold surpasses the $1 billion mark for the first time since March 2023, when a U.S. banking crisis saw the sudden collapse of Silicon Valley's bank and the voluntary liquidation of Silvergate's bank. Signature Bank was also forced to close operations by New York regulators on March 12th, 2 days after Silvergate's liquidation. Now, tokenized gold has experienced a significant surge in trading interest since early February, when global trade war fears started spreading to digital markets, according to a CEX.io research report shared by Cointelegraph. Now, here's a chart showcasing, we got PAX, XAUT, and CAL. So these are just 3 different gold-backed coins you got going on. And which one's performing more? Well, CAL did pretty good, but PAX-G is really going pretty good. But since Trump's first tariff announcement on January 20th, Paxos Gold is definitely in the green right now, as trading volumes has surged by over 900%. Tether Gold is trading rose over 300%, and Kinesis Gold volume increased by more than 83,000%, which is crazy. But tokenized gold has become one of the best performing crypto categories since Trump's inauguration, surging over 21% in market cap and over 1,000% in trading volume, while stablecoins just saw an 8% market cap increase and a 285% trading volume expansion during the same period. And here's again another chart showcasing that. Tokenized gold was 21%, stablecoins 8%, Bitcoin's down negative 19%, and total crypto in general is down 26%. But tokenized gold is part of the growing real-world assets tokenization sector, which refers to financial products and tangible assets such as real estate and fine arts minted on the blockchain. Now, gold prices also hit new highs recently. The surge in tokenized gold coincides with a record-setting performance in physical gold. On March 31st, gold hit an all-time high of over $3,100 per ounce and was trading above $3,118 at the time of this writing. But since the beginning of 2025, the price of gold has risen over 18%, outperforming Bitcoin, which has fallen by more than 12% year to date on the TradingView data. Now, gold's robust price performance after key tariff-related events highlights a growing appetite for safe haven assets, according to Ilya Otishenko, leader analysis at centralizedexchange.io. However, tokenized gold remains far from being a physical gold competitor at the current stage of real-world assets development. Now, the analysis told Cointelegraph that tokenized gold presents a compelling alternative for crypto-native investors who might otherwise look to Bitcoin or stablecoins. So yeah, if you want to look for a turn from just holding Bitcoin or stablecoins, you got tokenized gold as an option as well. But in this context, tokenized gold has primarily served as a diversification tool, gaining increased traction in investors' portfolios as market uncertainty deepens, he added. Now, geopolitical trade tensions caused by Trump's imported tariffs have inspired a flight to safety among crypto investors, specifically towards stablecoins and tokenized assets. Following the 2023 banking crisis, the Federal Reserve created the Bank Term Funding Program, offering banking loans of up to a year in return for posting qualified assets as collateral. Now, this emergency measure was what started the Bitcoin bull run in 2023, according to BitMEX co-founder and former CEO Arthur Hayes. So tokenized gold is increasing right now. And again, as people want a safe haven, they were uncertain, and because they were fearful, they were going, you know what, let's move into gold, but I don't want to sell my crypto to be able to go buy physical gold later. But so instead, they just trade it for one of these three tokens. Like, there we go. I have a token that's backed 1-to-1. But now we can take a look at the TruthSocial website, take a look just a little bit more about this token on gold. Safest way to own an investment grade gold, a digital token backed by physical gold. It's cost efficient, secure, no settlement, redeemable. It's also a lot easier to move overseas than trying to bring the gold with you. But let's see, where does it say where it's 1-to-1? Let's see, what are the benefits? How much gold is backing the total supply? Well, the amount of gold that represents a total supply of PAX-G is a 1-to-1 ratio. One fine troy ounce of gold equals one PAX-G token. So there you go. So that just showcases that it is 1-to-1 backed by 1 ounce of gold. So not bad. So tokenized gold is increasing. Like, maybe consider it. It's up to you. We'll never push you, or I'll never tell you to get into one coin or not, except for Bitcoin. That's always that's a no-brainer to get. But any other altcoin out there, like, if you're interested, I like help aiding you in this. So if you think this would be something you may want to get, go for it. Just always do your research before you truly invest in it. Now let's move on with our last articles revolving around NFTs out there. So Magic Eden acquires crypto trading app Slingshot to move beyond NFTs. Now, the NFT marketplace Magic Eden has acquired the crypto trading app Slingshot as part of a strategy to expand beyond NFTs. So Solana's non-fungible token marketplace, Magic Eden, has acquired crypto trading app Slingshot as part of its strategy to expand beyond NFTs as other marketplaces fold amid a prolonged market downturn. Now, the move expands Magic Eden's support to more than 8 million tokens across almost every major blockchain, and the firm said in an April 9th X post that there are no bridges, no centralized exchanges. This is another major step toward our vision of providing the best platform to trade all assets on, with all chains and everything else. Now, here's a tweet from Jack. Today's the last day you ever need to think about chains. Proud to share that Magic Eden has acquired Slingshot Crypto. First we were one chain, then we became cross-chain. Now no more chains. Trade instantly on all chains without bridging. This is how we'll be the #1 in NFTs plus tokens. Now, Slingshot has amassed nearly 1 million users to date, allowing users to access any token on 10 of the largest blockchains with universal USDC's balance. Now, Slingshot is one of the several crypto platforms aiming to deliver full chain abstraction, eliminating the need for users to choose the right wallet and ensure they have enough gas fees to find a trusted bridge as well as move funds, only then to buy the token they're after. So, like, this is trying to solve a lot of problems out there. Gas fees, bridging, which could have some risk to it as well. And yeah, just it's a nice little platform you can be using. But Magic Eden CEO Jack Liu hopes to integrate this integration will help shift more of the 500 million users who still rely on centralized exchanges toward more crypto native on-chain platforms. Now, the NFT marketplace has been in shudders as the market lulls right now. So we've been getting articles around saying, like, this exchange is closing up their NFT shop, this one's doing that. But Lou said that the Magic Eden and Slingshot and Magic Eden will continue to operate independently, but noted that there will be increasing connectivity between the platforms over time. Now, Lou also noted that Magic Eden made $75 million from its NFT marketplace in 2024 and hopes the Slingshot acquisition will help drive those numbers up even higher. Now, Magic Eden's expansion comes as several NFT marketplaces have shuttered in recent months. DraftKings, GameStop, and the crypto exchange Bybit all closed their NFT marketplaces, with Bybit citing falling NFT trading volumes in an April 8th announcement. Now, X2Y2 also recently announced that its NFT marketplace would shut down on April 30th as the firm looks to pivot into artificial intelligence. Now, NFT marketplaces have seen $1.6 billion worth of NFT sales across 14 million transactions so far in 2025, and that data comes from CryptoSlam. However, monthly sales volume have fallen every single month in 2025, and the 1.6 billion is nowhere near on track to match the 8.9 billion total from 2024, let alone the record 23.7 billion set in 2022. Now that was another time in 2022, like the 2021 bull run, like that was all about NFTs. People were getting in on that, thinking it was the next big deal. Like NFTs will serve a purpose down the road, but like the way people were seeing and viewing NFTs, oh man, so that was crazy. And hence we saw 23 billion in sales on that year. But since then, like we've noticed a decline in the recent years. But yeah, so that is what Magic Eden's doing to just expand into other tokens out there. Now let's go into OpenSea, talking about are arguing that NFTs aren't securities in their latest letter to the SEC. So let's read about this. Let me zoom in on this article so we can both see it clearly. So here we go. So yep, OpenSea argues NFTs aren't securities in a letter. So OpenSea, the online marketplace for non-fungible tokens, has formally sought an exemption from regulation under the Securities and Exchange Commission. In a letter sent to the Crypto Task Force Chairman, Commissioner Hester Pierce, on April 9th, the company laid out its rationale. It stated why it believes NFT marketplaces don't amount to operating as securities exchanges and security brokers under the Securities Exchange Act of 1934. Now, the correspondence is in response to a Wells notice that the SEC's Division of Enforcement sent OpenSea in 2024, which the SEC did pull all of those, all of those Wells notices and also cases. But yeah, so this is in correspondence too. That's like, hey, we don't want you guys to be sending us this stuff because we aren't that. But per the note, the firm had been operating as an unregistered security broker and exchange. OpenSea is filing to the Crypto Task Force in order to contextualize the firm's position and to seek the SEC's guidance on its regulation in relation to digital assets. Well, now that we got Paul Atkins in, we'll probably get a more clearer answer on this and definitely help out. But OpenSea explains its NFT transactions to the SEC. OpenSea's letter explains the technical workflow of NFT transactions to support its argument against exchange classification. According to the company, NFTs exist on blockchains with smart contracts functionality such as Ethereum, Solana, or Polygon. The minting process or creation process is the smart contracts activation used to produce a unique token ID with embedded metadata. And the firm highlighted that after minting, NFT transfers are carried out directly on the blockchain without OpenSea mediating the transaction, the letter states. So yeah, they were like saying like this is decentralized. Transfers happen without a central intermediary such as OpenSea performing the transaction. So they're saying like we're not doing any of this, so why are you treating us like an exchange? But OpenSea argues that it is not an exchange under the Exchange Act, and the Act requires consolidation of more than one buyer's and one seller's order through predetermined, non-discretionary rules. Now, there are two primary reasons the company argued that it is not an exchange. Firstly, OpenSea contends that marketplaces for NFTs do not pool together several sellers of the same item. Now, since each NFT is unique, there can only be one potential seller, and the owner is in question. So the company cited that the SEC remarks is an effort to give the marketplace with one seller for each instrument are not exchanges. Second, OpenSea insists that it does not operate as a trading facility or dictates terms of trades. And OpenSea contends that blockchain protocols and smart contracts, not OpenSea, dictate the terms for NFT transfers, and that OpenSea is only assisting users in formatting instructions for transactions that are executed on the chain. Now, OpenSea is also arguing against being classified as a broker. Now, the Exchange Act defined a broker as a person engaged in the business of effecting transactions and securities for the account of others. The company points out that the court's dismissal of similar claims in the SEC versus Coinbase as instructive for its case. Now, the letter outlines several characteristics that differentiate OpenSea from traditional brokers. They say OpenSea does not act as a broker for many of the same reasons as Coinbase wallet software, including because its marketplace features no solicitation or investment advice, no negotiation or execution of transactions, no custody of a customer asset, and no financing and arrangements, processing, trade, documentation, perform evaluations, or other hallmarks of broker services. So they are claiming they are none of that. But at more fundamental level, OpenSea maintained that NFTs themselves are not securities under the Exchange Act. The company argued that most NFTs are collectibles or art purchased primarily for consumption, novelty, or aesthetic value rather than for investment. Now, the letter acknowledged that even if some NFT transactions were deemed securities, classifying NFT marketplaces as securities exchanges or brokers would constitute regulatory overreach. Now, this stance reflects OpenSea's position that's the unique nature of the non-fungible asset and requires distinct regulatory consideration rather than applying frameworks designed for traditional security markets. Now, OpenSea's letter gives NFT recommendations. Now, in this letter, it concluded with specific recommendations for the SEC to address regulatory uncertainty in the NFT marketplace sector. The company suggests that previous enforcement actions appeared more focused on expanding the Commission's jurisdiction than addressing the actual risk profiles of NFT platforms. Now, to resolve this uncertainty, OpenSea proposed several concrete regulatory steps. First, it requested that the SEC clearly stated that NFT marketplaces do not qualify as exchanges under federal security laws. The company suggests that the Commission should issue informal guidance in the near term, and such as an interpretive release or staff bulletin clarifying how Rule 3B-16 applies to NFT marketplaces. Now, regarding broker classifications, OpenSea urges the Commission to clarify that marketplaces with certain characteristics are not brokers under the Exchange Act. Now, these characteristics involve platforms that provide various kinds of information about NFTs. However, they do not provide valuations or advice about investing in NFTs, and platforms that facilitate communication between users but do not facilitate a transaction or custodian of digital assets. Now, this highlights that these clarifications would be beneficial to the NFT ecosystem overall, as they would eliminate regulatory uncertainty. So, OpenSea is just writing a letter, and I feel like we will get this addressed eventually, but I feel like right now, like Trump, the SEC, and the team, like they're going to be focused on Bitcoin, other cryptocurrencies, and what else are they going to be focusing on? Right, stable coins right now. I feel like that's going to be their main focus. Like that's what they're hitting first up, but eventually it will lead into the NFT space as well. But this is a good start. OpenSea is giving them some information. Maybe they'll be a part of the board to just talk about this, discuss this, be one part of those meetings that the SEC is always having. But yeah, so I feel like they will eventually address NFTs and where they stand with the SEC and rules and regulation. But right now, I think we're just going to be still, again, focused on Bitcoin, reserves, stable coins, and that. So yeah, so that is all the news I have for you. Hope you enjoyed it. Sorry about the mishap where this show got cut off because the power in my office got shut down. So somebody out there is messing with the electricity. Let's take a look at the quick fear and greed index right now. Bitcoin, the fear is currently at 25, so we went up 10 points. So after that pause, people's fear tend to went up a little bit. So they're getting a little bit more greedy. Bitcoin's currently at $78,000 right now. Ethereum's back down to $14.89. XRP's at $1.93, and Solana's at $1.08. So yeah, so hope everybody has a fantastic, fabulous day. I will see you again tomorrow, hopefully at noon, as long as I don't get too busy. So again, sorry for being late, but I will see you again tomorrow for more crypto news. So everyone take care and see you tomorrow.
Ever felt left out of the crypto craze? Not anymore. Welcome to Bitcoin Ben Crypto Club, where community meets opportunity. Our clubs are popping up nationwide, from Sarasota to Nashville, Boston to St. Louis. Join us and unlock a world of benefits. Access all clubs worldwide, earn through referrals, and dive into specialized crypto education. Need help buying crypto? We've got you covered, often with reduced fees. But wait, there's more. Enjoy perks like Bitcoin ATMs, silver purchases, and exclusive investment opportunities. Our state-of-the-art facilities offer podcast rooms, event spaces, and co-working areas. Stay informed with FGTV, our exclusive crypto news and education channel. Choose your membership, from day passes to individual or company plans. Individual members get access for themselves plus 2 guests, perfect for bringing friends or family. Companies can bring up to 15 employees or guests, fostering team growth and networking. Connect, learn, and grow with like-minded crypto enthusiasts. Ready to join the revolution? Visit BitcoinBenCryptoClub.com or call 562-526-0813 today. Bitcoin Ben Crypto Club, your gateway to crypto.